Hey, it's Clay, and this will be a video chart on ticker symbol WKEY. We will take a look at the 30-minute time frame. If you're not sure what I mean by 30-minute, I do offer an explanation video at that link. Well, a crazy day on this one. Price all over the place, and how you view the chart is going to be dependent on what your strategy was going in. What do I mean by that? Well, if you're some sort of day trader, flipper, scalper, and you were buying right there, or you were buying right there, and your thought was, I'm going to buy and sell within 20 minutes. Well, from that perspective, the chart looks terrible because the thing just continued on down and dropped and dropped and dropped. So from that angle, yeah, not very good. The chart doesn't look bullish at all. However, assuming maybe you care about more things from more so the bigger picture point of view, then overall the chart hasn't done anything wrong. So just to illustrate this in a couple ways, I'm going to draw this little miniature trend line right there. And actually, let me change that to green to represent a bullish trend line. But the price is still up above that trend line there. And not only is it up above that trend line, even if it's, no, Clay, why are you even drawing that? Fine. But the price is still up above that purple line there, which on my chart denotes the 50-period moving average. And even if you have a very basic, very surface deep understanding of charts, I'm sure you've heard of the 50-period moving average, and you know that when the price is up above that level, then yeah, generally speaking, you want to see the price stay up above it because that implies that the overall chart is still bullish. So from either of those angles, everything is still perfectly fine. Again, assuming you care about the grand scheme of things. If you're a day trader and you bought right there, then yeah, I realize you don't care about either of these levels, but that's why I'm really trying to emphasize that there's kind of two different mindsets that are out there. Now, if the price does try to recover back upwards, first key area of resistance to watch in any sort of recovery, going to be right there at 1750. And then after 1750, next key level up there, right around that $20 mark. So keep your eye on these technical levels moving forward. But again, very tricky chart because it's all about perspective. But overall, shaky looking chart, but it's hanging in there, so we'll see what next week has to offer. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.